It's been a relatively robust year in 2023 so far. Certainly not like we saw in 2020 or 2021, but so far year to date, we've seen over $130 billion of issuance, which is up significantly from the $70 billion we saw at this point last year. And while we're certainly not back in a fully normalized market, we've seen a very busy last couple of quarters. And in particular, September, there was a lot of activity in your space. So do you want to maybe comment on a couple of the deals that we were involved with in September?
Yeah, so sure. As you say, the quarter was quite robust at $47 billion, so about a third of what we saw for the whole year. So August is a typically slow month, as you know, from the summer vacations, but September post-Labor Day came out quite active. So as you know, for us, we had 9 deals that we did in September, raising over $8 billion, but particularly we saw a lot of activity in the IPO market. So ARM came out right after Labor Day, $5.2 billion, largest IPO of the year. Followed a week later by Klaviyo at $576 million. We were active books on both of those, so very much in the flow of the information. We did a follow-on for Squarespace. That was $167 million, and we managed to squeeze in there a $1 billion plus convertible for Live Nation. So very busy, a very different feel in September, I think, than we saw in July and August.
And you want to talk a little bit about those transactions, particularly the ARM and Klaviyo deals, because I think those were a bit of a turning point, or at least the market was looking to them to be a turning point for the IPO market for the rest of 2023 and rolling into 24. You want to talk about investor demand and how people look at those transactions?
So we've had an 18-month drought on IPOs. There's been virtually nothing for the last year and a half, and there's a lot of attention was on these deals. Instacart also came out, $660 million deal. The conversations that we have with issuers are, when is the right time to go? And there's concern about the markets. And I think the market backdrop's been better, right? I mean, the markets are up this year, volatility's down. We're through most of the interest rate cycle, if not all of those raises. So that uncertainty has been removed. And I think that's opened the door for all this issuance. That said, there's this fear of being first, right? Nobody wants to be the guinea pig. I think we have enough deals now where the guinea pig issue is behind us, right? There's data points, the deals we just mentioned. And the lack of issuance was reflected in the demand we saw. So I think there's folks on the sidelines, they want to invest, they're waiting for the right time. What we've also been waiting for is this marriage between, sellers' desired valuations and what the investor's willing to pay for. And I think we finally maybe have a meeting of the minds at this point.
Yeah, no doubt about that. I think the other thing that's really interesting is that in the deals that we saw, that you mentioned, and a lot of other IPOs that have happened this year, we've had cornerstone investors which have really anchored the deal and given them some strength out of the gate. I think, first of all, one, those anchors provide a validation, if you will, on those transactions, whether it's in terms of the story, whether it's in terms of valuation. But I think the other important thing that we've seen is that those anchor investors eat up a little bit of the actual issue itself. So it creates a little bit of scarcity value, forcing allocations to be scaled back for those participating in the deal, and really forcing the investors' hands to participate in the aftermarket.
Yeah, so all of those deals have had some sort of anchor investors. And you're right that when you plan on allocating those guys shares, it does skinny the amount that's available for everyone else. And that those oversubscription levels then tend to help the aftermarket performance. And the aftermarket performance has, as you know, been quite good on these deals.
Yeah, no doubt. And look, I think the other thing that was encouraging, that away from all these tech transactions, you mentioned the 9 deals that we were in. There were a lot of other deals that happened this month across other sectors, whether it's, energy transactions driven by M&A. We were in the Silverbow transaction, which was to pay a portion of their acquisition of assets out of Chesapeake. We saw Vital Energy, Crescent Energy, all coming to market with the follow-on. And then also Essential Properties Realty Trust, where we were an active book runner, raised capital at a follow-on offering, which was one of the first real estate follow-on offerings in a while. So it's encouraging to me that we've seen activity outside of the TMT sector this month. But when you think about the TMT calendar and the issuance calendar, particularly around the IPO product, what do you see coming the rest of the year and then as we roll into 2024?
So we saw Birkenstock launch this morning. So there's $1 billion, $1.5 billion IPO that's coming out of the consumer retail sector right now. We're involved in a number of other deals that are preparing to go. I think we've got one big one that we expect out of the software space to come, this month or the latter part of this month. So I think there's flow happening. I do think there's still folks that are waiting, and if we're trying to prognosticate, I think we see it accelerating into the first quarter and then further into the second quarter.
Yeah, I think that's right. Look, I've been with a couple of sponsor-backed potential 2024 and 2025 IPOs over the last couple of weeks. And what I found listening to the companies, but listening to the sponsors as well, is that everybody's looking for that valuation gap to close, as you talked about earlier. If they have to come out at a discount of 30% relative to the public market comps, they'll probably stay private for another quarter or two until that discount dissipates. But if they get to a point where you get more in the wheelhouse of the traditional IPO discount closer to 15%, I think you'll see some of these names that have been sitting on the shelves of the PE companies start to come back to market and really get serious about going public in 2024.
And I think we're there because, Instacart's a good example of that. They last raised capital in February of 21 at a $39 billion valuation, and they came out at an $8 to $9 billion valuation. So that meeting of the minds is, I think, finally taking place. And after 18 months of dislocation, I think sellers are forced to realize that this is the new reality, right? These are the valuation levels. And to transact today, you have to transact at today's values. I mean, you can wait, but that didn't work out so well for the last 18 months for those that wanted to wait. So I think that all leads to the same conclusion that we're talking about, that this is about to get considerably more active.